All right, we are live. Give folks a few seconds to join, but hello, morning, afternoon, evening. Thank you for being here. Tell us in the chat where you're joining from. You know how much we love an active chat. So put your questions in the Q&A and we will make sure we spend some time towards the end to address all your questions. My name is Shuchi and I'm your host and moderator, and delighted to be joined by two wonderfully amazing investors, two of my favorites. It's such an honor to have you both here. And it's honestly a dream come true to have you both on one panel. So thank you again for joining us, Dan and Mallun. And without further ado, let's maybe start with your backgrounds. It's such a diverse background. Take us back to perhaps what was the transition like from corporate to the world of investing? And Dan, maybe I'll start with you. You call yourself an accidental angel investor. How does an accident like being the first check in Zoom happen?
Well, yeah, Shushi, first of all, it's such an honor to be here with you and all the great people of ServiceNow and people joining from the outside. Thank you so much for this opportunity. I would also say, just generally for all of you listening, Mallun informative, hopefully Dan funny. So listen to Mallun. My journey really was accidental because I was a long time, probably too long at Cisco. And I was 18 years there. And when I left, you know, I did exactly what you're not supposed to do. I had absolutely no plan. And I figured, you know, I had done a lot there. I'll figure something out. It'll be easy. And for about a month, I sat in my living room, you know, waiting for the phone to ring. And the only call was from, you know, relatives of mine asking if I was employed or not. So I realized bad strategy. And I went to go talk to venture funds, and I got the whole, you know, you're old and stupid. And I tried to argue, wait a second, I'm old or stupid, not old and stupid. And I began to realize that there was a kind of a demographic mismatch between me and them. So I stopped doing that. And I talked to private equity, which I didn't like because that was so financially, you know, oriented. And in the end, what I did is I got a little bit of a chip on my shoulder. And I said, hey, I think I can do this myself. And so I had to figure out, how do I get income? Because I, of course, had zero income. So that was problem one, which turned out to be okay. And then problem two was, how do I get access? And where do I get access? And what's the strategy? And I kind of said, look, if I'm old and stupid, imagine what technical founders are hearing who are over 35, right? They're hearing a lot of it, or they may not be hearing it, but it's what people are saying behind closed doors. And so I decided to focus there in the beginning on older investors, where I thought the glide path to go to market was much better if they were customer friendly. And that's really how I got started. And among the first things I did was have coffee, or actually tea. Eric and I are both tea drinkers, with Eric at Kappa Kappa in Palo Alto. And you know, and kind of went from there, right? And it's been a great joy and a great ride. Let me just close this by saying, a number of people still ask me, when are you going to get a real job? And I have to explain, this kind of is a real job at this point, you know?
No, it's incredible. And Eric, of all people, just such an amazing human and a great leader. So yeah, it's an inspiration to see him. All right, Mallun, you truly are a force of nature. I mean, in addition to being an investor, the community of operators that you've been able to bring together, it's just unlike anything else I've ever seen. So, well, first of all, thank you for being who you are. And tell us about your journey. Tell us about your background with Operator Collective and perhaps prior to that.
Sure. Well, first of all, you know, lots of stories about Dan. I want to start there for a moment, because Dan and I actually first started our careers as lawyers. I was Dan's outside counsel as a baby associate at a law firm, and Dan's superpower has always been and continues to be that he sees people that otherwise aren't seen and makes them feel like they have superpowers. And so from the moment I was a baby associate, Dan would walk in and be like, you know, you're incredible. And, you know, to have the general counsel, he was the general counsel of Cisco at the time, notice you was incredible. And so many times along, so many so many moments along the way, and part of my path has been, thanks to the confidence of people like Dan who have instilled in me. And Dan, I see you do that with so many founders. We're fortunate to have Dan as one of our advisors from the very beginning of the fund, and we co-invest in a number of companies together, and it's incredible. So he's absolutely maybe accidental in that people were not smart enough to snap him up immediately when he was leaving Cisco and deciding what to do, but it's not an accident as to why he finds great companies and why those companies are successful. I learned a lot from him.
No,
So,
absolutely. Just to add, you truly are a gift to this world, Dan. So thank you for how you show up, especially. Yeah. But go
and in
ahead.
fact, Dan deserves a lot of credit for the beginning of Operator Collective, because truth be told, when you are a sort of a perpetual starter of things like I am, whether it's a nonprofit, which was my first community, to helping with SaaStr from the very beginning in early days, to Operator Collective. I had a few other ideas too, as I was trying to figure out what I wanted to do when my venture-backed startup, which we took from 0 to 100 million in public in 3 years, we took private again. And so the first time I had a moment to say, well, what do I want to do? So there were a couple of times that Dan and I met in San Mateo, and I came up with a few ideas, and he was like, and then when I came up with the beginnings of what was Operator Collective, he goes like this. He goes, this is good. Keep going. Which was really critical early validation, because at the time there was no deck, there was no nothing. It was just an idea. And the idea was, I've always loved building communities and putting people together. I think because I spent a lot of my time feeling growing up, I was a very late bloomer. I think I didn't really start to even be particularly comfortable, whether it's public speaking or just making small talk, things like that, until I was in my 30s. And so always felt like an outsider. And so when I built communities, it was not really deliberate at the time. It was more like start with the people who were not in the in crowd. My first community was a nonprofit that was women in patent law. There were 7 of us. It's now 5,000 members and 22 chapters around the world. But that's what I did with Operator Collective. I started with, what do I know? And at the time, I was the COO of SaaStr, and what I saw was the same thing that I saw in women in patent law, which is we're also busy with our day jobs and day lives. You would think that there's so few of you out there that maybe look like you, that you should all know each other. But the fact is you're so busy, working 150% of the time and trying to raise a family, or you've got elderly parents or pets or whatever it is, that you don't have time to. And so the same thing that I saw that motivated me to start CHIPS, which was the Women in Patent Law nonprofit, was the same thing that motivated me to start Operator Collective, which is all the women COOs, because there were not very many of them. So this is like Claire Hughes Johnson, who's the COO of Stripe, and Karen Peacock, who's the COO of Entercom and became the CEO, et cetera. Turns out that you kind of knew who everyone was, but you didn't really know each other. So we brought them together. And then from there, it was also that, okay, that's great. We see each other, and now we all go back to our busy lives and nothing happens. I was like, no, we need something that's a glue that will continue to bring us together. And so that's why Operator Collective was born, which was, we're on our second fund. Second fund 2 is a $92 million venture fund. We invest in enterprise and B2B. And we have, in addition to institutional investors, over 200 operator LPs, who are people like Claire and Karen, et cetera, and so that's kind of the glue that brings us together. But with any community, what you do is you start with your niche, which is who are the people who are most like you. It's like when you build any product, when you're a startup, if you try to be too broad, it's like, how many startups have you heard, Dan and Suchi, where it's like, we're going to be a platform. No, you don't get just to be a platform. You have to start with a niche and then become a platform, or we're going to be a marketplace. You can't. It's the same thing with building a community. You start with what you know, you really nail that niche, and then you expand from there. So we started with women COOs who were in charge of revenue, and then also very quickly expanded to, what are all the things you need to build and scale a company? But it was also very specific. Most of us are over 40. Most of us have kids. Those are not prerequisites. It just happens to be the people that gravitate toward and know and have the same life experience, similar life experiences. And most of us also, because a lot of people like you, most of us happen to be women too.
No, that's incredible. And just to add to, I feel like I'm a late bloomer as well. It was a very conscious and intentional process for me to come out of my own shell. So I can completely relate. And
I
again,
feel like most of us I mean, generally speaking, but a lot of people that I've met, especially in tech, we're born introverts. And in
Mhm.
fact, some of us were very happy with the whole Zoom world for many
Yes.
years. But we're forced to learn to be extroverts. And then I mean, it's still tiring, but also you realize like, wow, actually you do get a lot of joy out of connecting with people. But most of us, I think, are learned extroverts or forced extroverts.
Absolutely. Can agree more. All right. So between the two of you, I think you've invested in some of the most successful companies, and Dan, you alone have been a part of what, $50 billion in value creation across your portfolio. So what is it?
As of this morning, 80.
Wow, yay.
Yeah.
Congratulations. So yeah, what does it take to be where you are, to be you? And what are some of the lessons learned, if you will, along the way, both good and bad?
It's a great question, Shuchi. The one thing that I would say, just following up from the previous conversation, is I do think, particularly in the world of venture, there is definitely tension between the extroverts and the introverts.
Mhm.
And if you go into big venture, you're going to find that a lot of the people who are sort of, out there in big personalities are deep extroverts. But I actually think the introverts make better partners and investors. Obviously, I'm on that side, but it's a super interesting, right? I always think that's one of the more interesting, uncommented on, kind of subtleties in the whole ecosystem. Having said that, here's what I've learned, right? There are only two things that matter, right, when you're doing these things. One is the founding team great,
Mhm.
right? And if the founding team is not great, don't do it. And what does great mean? It means a whole lot of things, but most importantly to me is it means they're technical and they love customers, right? And if you have that, then that's the magic that you can't repeat, right? I mean, I always joke around with Eric. I say, hey, you're just like Jay Sri and Andy at Arista, and he always says, those guys are geniuses. I'm somewhere down low. I'm like, no. But the thing that they all share is these guys are like incredibly attentive to customers, and they love the customer. And I tell a story about Eric all the time, but in the beginning, Zoom was only selling to small business. So it was literally, people less than 5 employees. That's all he was doing. And he would call everyone who canceled the service. Right. Now, the number one reason people cancel the service is they only wanted to pay for 1 month, right? There was no product problem. But he called every single person, right? Because he wanted to hear it and understand it. And I think if you have that unwavering customer focus, that's what's really incredible. And then all of that those people are very rare. The great founders, the love of customer, technical strength, those are very rare. When you find those, back up the Brinks truck. That's the core. Everyone else you're compromising in some way. And then the other thing for me is I can't chase the hot deals. I will not be chasing hot deals because my check size isn't big enough now to get into a $60 million seed round, right? I don't want to have to put in 600K in one deal and then hope it all works out. And also the track record of those kinds of deals isn't great over time. So I'm already looking for outliers. And so for me, I've got to find outliers somewhere. And people who the current ecosystem, for whatever reason, don't see value in. And so I'm constantly looking to try and find outliers, because my whole life I've been aided by finding outliers in my career and in my life. That's basically what I did, right? And so that's where I'm most comfortable. And if I can find outliers, then I'm super happy. The last several years, it's been super tough in a bubble because valuations went too high. Founders were not great, to be totally honest. And so it was hard. I still found some things I like, but the last couple of years, probably we still have a lot of work to do to, kind of dig ourselves out of the last couple of years. What I would say is, for me, I love the search for the new. I don't put pressure on myself to do a certain number of deals. We'll talk about that later. But I think there are only so many great founders, and all you need to do is find 1 or 2 of them a year, and that will carry you.
Great advice. Mallun? for you?
You know, I get the benefit of having a lot of Dan's wisdom, and you know, obviously couldn't agree more. You know, one thing, Dan, actually, I would love you to tell, because I've heard the story, and I don't know if everyone else has, is, you know, Zoom was obviously a great success story, but when you started, nobody would fund Eric.
Hmm.
I mean, I'll come back to me in a second, but Dan, it's
Okay.
a great story, and it is exactly what your thesis was too.
Right. And so for me, to be clear, I was driving down to Capa from San Mateo, my hometown, and I was doing my final diligence checks on Eric, and everybody was like, if I could work for that guy, I would, right? That guy is incredible. He's great, yada, yada, yada. And I already knew him from Cisco, and I love the guy, right? Because he is, as Shushi said, he is so humble, but brilliant, but humble, right? That he's incredible. So I got there and I basically said, Eric, I mean, I thought it was going to be a hugely competitive deal. I'm like, I got to get in. So I'm like, Eric, I love you, right? And he kind of looks at me and says, okay, that's nice. And I said, here's a check. And again, he kind of says, do you even want to know what I'm doing? And I said, look, the chance to work with somebody like you, they aren't that many of them. And so I don't care if you're selling avocados, I'm in. Well, it turned out that my enthusiasm was rare. The rest of the world said, hey, this is a rebound deal. He's coming out of WebEx, which, you know, nobody likes. And there's a bunch of Y Combinator companies who are building the same thing, right? Although none of them had technology, quite frankly. All of them were building on open protocols. And the whole venture ecosystem basically said, you don't know what you're doing. In fact, quite frankly, I got one of my first things I learned was there's one VC who unfortunately has retired, who turned out to be wrong on everything, and also would take me to lunch to tell me why I was an idiot. And so I would get free lunch, and I would do the opposite of whatever this guy said. And I was so sad when he left the venture ecosystem. It was bad, but we couldn't get funding, and people couldn't see the vision of what Zoom could be. And it was so bad that we were in one fund, and in reception it said, this is like 2011, it said the future will be mobile, the future will be communication, and the future will be, video. And we're like, oh, this is great. We were thrown out in 2.5 minutes. The venture person threw us out. I was walking out. Eric was like, what happened? I said, we pitched the wrong person. We should have pitched the receptionist who was looking at the propaganda all day. That person would have liked us. But we had to out execute everybody, and it actually turned out to be good because we couldn't over raise. Every dollar was precious. Eric had to focus on profitability almost immediately, and it showed what a great founder he was, because he said, I'm not sure I can raise a round ever, and so I'm going to go and act like I can never raise the next round. And in some ways, it's so much better than the people who get the $100 million check or whatever crazy check day one, and then start staffing up before they have product market fit. So it actually all worked out, but I couldn't believe the level of rejection we got. We were two old guys, who were not valued in the ecosystem, and it's like, wow. So, anyway, and it worked out.
Thank you for supporting. I mean, I want to thank you on all of our behalves, because this is probably one of the most impactful product of our time. So thank you again. But Mallun?
Yeah. So in addition to what Dan said, of trying to find the outliers, of trying to find the customer obsessed CEO. And, it always works. I said oftentimes it works best when they are technical. So Dan has a very specific, he invests very early he's very disciplined about his valuation. We're a little bit more flexible. We're an early stage investor, but we typically are seed and A, whereas Dan's often the very, very first check-in. We'll do some pre-seed. And so we have a little bit more flexibility, and also means that we can also look at a number of things. So the way I put together Operator Collective is I built a lot of products and tried to sell a lot of things. So I also know I want to have product market fit, and I don't want to be just another person chasing a deal with dollars. And so I wanted to put together a product that was so compelling. And our product is our operators, which is we have over 200 operator LPs. They're all, referral, word of mouth, people who have built and scaled up companies like Salesforce and Stripe and elsewhere. And I said, if we could put together this group of, outliers, 70% of our LPs, despite all these phenomenal backgrounds, have never invested in venture before. And so all this talent out there is like, if we can make venture accessible to them, they can participate in the fund, and we can put together a fund that has all of this expertise that can not only help us vet companies. So when we're diligencing companies, we can decide, is this a product that people who are live operators now running these companies are facing today? Then that's incredible, signaling. And then second, once we invest in the company, all of this network is literally, financially incentivized and aligned to help accelerate the success of these companies. And so we do have the benefit of being able to take a little bit more time than most. So even when people were chasing these deals, the lead investor would chase the deals, people would bring us in as the strategic investor. And so we could take our time. Oftentimes with venture, they'll do the first close, and then they'll have like 90 days to be able to add on a strategic or angels or whoever it is. And so oftentimes we can take our time during the 90 days to be able to actually do the deeper diligence. So in some cases, we have joined some of the hot deals, but we did it only after taking our time in diligence. And other times it is like, okay, it's not the hot VC, it's or the one that everyone's chasing, because we tend to shy away from some of those too, because the valuations tend to be very outsized. And then really sort of take our time and really do diligence and figure out, is this something that's a real problem that people are facing? And then when times are tough, Dan and I sit on, we share a few investments and we sit on a board together. And when times are tough, you can really see how the operating background that Dan has, that Operator Collective has, and, sometimes the other VCs have as well, really makes a difference. So that's kind of how we've approached things.
Absolutely. No, that's wonderful. Well, then that's a great segue to one of my questions, which is, could we talk a little bit about how that background of being an operator, how you show up for your companies, and how perhaps that's different from a traditional like VC, if you will. So, Dan, do you want to kick us off there?
Absolutely. First off, just one somewhat funny but true anecdote about Mallun's venture fund, which is the number one thing I get asked when people say, "Oh, I see that you're an advisor there. Tell me, how do you build a community?" And the real answer is you start with one, right? And then you build a venture fund, right? And so many of these funds are out there now trying to figure out how to do what Mallun's done, right, in an inauthentic way, whereas she has the joy of everything. One of the joys of Mallun being not only brilliant but also authentic is everything is real, right? The community is real, everything's real, and it's kind of amazing how many people will stop what they're doing and say, "Yes, Mallun, I'm there." So, but let me try and just twist your question a little bit and say, one of the things that I think a lot of the audience will say is, "Hey, maybe I want to be a VC. How do I get into VC?" Right? And one thing I would say is, "Hey, I failed, so I don't know," right? But here are some observations from a guy where it didn't work. But one thing I think is, you have to be. One thing that I would say generally is investing a little bit on the side of ServiceNow allows you to do it, and don't do it in anything that competes with ServiceNow, of course, right? Don't get yourself in trouble. But investing on the side is one of the best ways, because then you will have a quote track record, and you'll begin to understand the lingo of investing and some of the ups and downs. And obviously don't invest money that you can't afford to lose, because 90% of the stuff still doesn't work out, right? But I would say do that. And then if you're younger, I think a lot of what venture funds hire in the younger role is your network. And so personally, what I'd say is, even if you're an introvert, go out and try to figure out how to build a network, because what the institutional VCs believe is that networks lead to deals, right? And so if you have a network and engineers and you talk to engineers, that makes you interesting to VC funds as a youth, right? If you get older, it gets harder, and because VCs are actually set up to be 10-year paths, and they're not set up with that many senior people, and the senior people who are there are not really kind of sharers, right? They want to control everything. So there, I would say, you're almost in a strange thing of either you have a relationship with VCs that you developed during your career, or you're willing to work in some role where they can see you for a little bit, but you'll generally get ripped off in that job. But I think that those are paths. But the best thing you can do, really, that qualifies you more than anything else, is show that an investment thesis, and show that you are investing. And even if you're investing small amounts, like sub 10K amounts, right? And even if you just do it 3 or 4 times, I mean, it helped me tremendously. That it teaches you so much about the rhythm and all that. And then to your final question about what about being an operator helps. So this is the crazy thing. Being an operator is like one of the most important things, because once you make the investment, you're there for the advice, right? And it's all about what you've seen and what you've done. But oddly, like, the VC world values the investment decision at 99% and the advice at 1%. Now, that's not universally true, but it's weird, right? And so I personally think having clear and repeatable advice to founders is super important. I see some VCs will, be swayed in the moment. In every meeting they come in and, hey, momentum is good, double down. Things are crap, fire everybody, right? And that's not really great advice, right? And so I just think having an operating background, I think, is actually good. I don't think VCs actually value it that much, and I think it's a mistake.
No, that's important point. Mallun, so you have LPs that are operators, and then you also, I'm assuming, in the advice side, maybe they step in to help out how's the whole thing structured? Can you, or as an operator, like, what's your experience been with your startups, with your portfolio?
So even stepping back fundamentally, I guess I am a VC, and Dan is not is probably not a VC, but the fact is like, operator collectives run like a company, because when you're an operator, like I presume pretty much every single person on this call is, you're used to working in teams, right? At Cisco, we got a lot of training, and it's all about teams, right? It wasn't about how good you are as an individual. It's about the team, and also teams make for great results. Venture capital is not really a team sport. In most traditional funds, you have individual partners who sometimes are in competition with each other. And so you're not just saying, okay, what's the good of the companies that we're invested in? It's, no, I want my companies to be successful. It's sort of set up that way. And again, I'm generalizing. It's not, there's some nuances along the side. And so what I wanted to do with Operator Collective, to set it up so it's like all our one company. We have, our product is our operators and our operating expertise. Our customers are founders. And so what kind of service? And so we really work as a team, as teams. And so that's one difference with respect to, I think what operators bring to the table is that you're used to working as a team and working collaboratively. And as Dan said, most traditional VCs to funds don't really value that, because they're not focused on team-oriented approaches. And then to your question of I guess what your question is, how do operators come?
Yeah, how do they get like your LPs, if you will? They're also operators. Like, do they get engaged? Like, what is the process, if you will?
And so one of the reasons I started Operator Collective is, I agree with Dan, doing a little bit of angel investing on the side, and you can do small checks, because if you have an operating background that brings value, they will take even $5,000 checks sometimes. Not that many of them, because it is hard to manage a cap table. But I also wanted to do is, my demographic was over 40, have kids, can barely survive, the house of cards that I've carefully set up to be able to do what I do. And it's like, how can we make venture accessible? And I didn't have a high net worth where I could just go out and write all these checks. But I also knew that if we could, one of the things you want to do with investing is, it's not just picking one company, it's to have a portfolio. And so that's what I did with Operator Collective, is, can you have operators being able to contribute when they want to, and their expertise when they need it. Because I knew that if I'm advising a company, I don't know all the answers. There's certain things that I really know how to do. I built a go-to-market organization and grew sales from 0 to 300 million in the enterprise. But I don't really know that much about structuring partnerships. I don't know that much about hiring and building an engineering team. And so what I wanted to do was say, hey, if we can all participate, but we can bring to the table what it is that we're best at and make it fit into our busy lives, then that's going to make a successful, a fund that I would want to be a part of. Because otherwise, it's like, I don't want to be just someone who's having to do and hunt on my own and support the companies largely on my own. And so that's what our operators bring to the table, which is it's primarily active operators who are working now, who have the active networks now there because they know, who's hiring, who's on the market, but also they're the ones who are making the buying decisions. And our fund is all enterprise and B2B. So we get really great signaling from them. And our founders love it. As part of our diligence process, we introduce them to people who would be potential users of the product. And so they get in front of Suchi at ServiceNow, they get in front of so-and-so at whatever company. And that gives us great, feedback on whether or not this is a founder and a problem that we want to invest in. And on the founder side, they're like, oh my gosh, this is like Dan mentioned, this is the real community in action. I got in front of this company where it might have taken me a year to do so. So that's how we utilize our operators. They're front and center and core. And then to Dan's comment too, I still get a lot of inquiries from people who are heads of venture funds. And they asked me, hey, who's your director? Who's your head of community? Because I need to hire a head of community so we can build a community like yours. And like, that's not how you build a community. It has to come from you. It has to come from the top. And so when I built Operator Collective, it was about really tearing apart the whole venture structure, starting with the community and rebuilding it from the ground up to optimize for the community. It's sort of like startups too, which is sometimes you have, not that you can't do it, but sometimes you have a company, it's like, oh, let's just tack on this AI thing. I see an AI question there. But in some ways that's hard. I mean, in many ways that's hard. Instead of if you're AI native and you're rebuilding from the ground up, not impossible, but you can't just be like, oh, let me hire a low-level product manager and we're going to integrate AI into our product.
Yep. Yeah, I feel like people think that a community is like, let's hire one person that'll take care of community. But I completely agree. It's a very intentional process across the organization. So thank you for saying that. All right. Well, if folks could please keep their questions in the Q&A section so we can focus instead of the chat. But yeah, great comments. Thank you all for engaging. All right. So can each of you talk a little bit about your process, especially when in some cases, Dan, for you, it's the first check-in. How are you able to break through the noise in the market? There's like so many ideas, so many startups. And then Mallun, you're a little later stage, but still early, I would say. But Dan, do you want to?
So the reality is that, look, there's no, VCs talk about signals, right? And I rebel against that word, and then I think it's the right word, and then I rebel against that word. So, you will see things from me that are all over the map when it's about signals. But I think there's a lot you can learn by just spending time with people. And because the reality is that these relationships, if they're successful, are going to be a decade long or more, right? And I've never actually asked for a board seat. Board seats have always, someone has said, would you please join my board, right? And so when that happens, you're going to have a long-term relationship with the company. And so for me, I want to know, do I like this person, right? And when things get bad, there's never been a company that hasn't had a bad something, right? Missing quarters, or, something happens, or people quitting, whatever it is. Do you want to be in the foxhole, and can they, will they be able to rise above the problems, right? And particularly what I look for is, problem solving skills, right? Do they have problem solving skills? And, so again, being early, sometimes I'm wrong. I read somebody and I get it wrong, happens, right? But when I get it right, it makes it just so much better, because we have that trust, and that we can stick together and kind of work together. Anyway, so it's to me, it's got to be, you have to trust that, that intuition and that feeling about people, and that's the core.
Awesome. Great. Mallun? Oh, you're on mute still, I think.
Sorry about that. So remind me the question.
Yeah, the question is, how do you pick your startups? How do you pick your portfolio and break through the noise, if you will? Because what's that process like to companies that you choose to invest in?
Yeah. So it always, as Dan said, it always starts with the founder, because is this someone that you would want to work for? Is this someone who can recruit? Because when you start a company, the founding team, you can muscle a company off the ground and just by sheer will of like working hard and just getting to that initial, but very quickly you need to start to build a team. If you can't build a team and you can't recruit, then you're not going to be able to grow your company. And so we look for, is that a founder who's obsessed with the product and the vision of what they want to do? Is this someone who will be able to recruit? And the other thing that I see is like, why are they doing this? Are they a founder who ran into this problem and are so committed to wanting to solve it, and they experienced it? Those are the founders we often see who are most successful, as opposed to someone who just wanted to do a startup. And it's like, okay, let me think of an idea. And you do see those. And I'm not saying, again, that these could not be successful, but the ones that we've seen are the ones who have really experienced the problem. It's one of the reasons why I started Operator Collective, which is I saw the problem out there and said, I need to do something about it. And then the other thing is you have to be so obsessed with it, because starting a company is really, really hard. So you need to be obsessed with it sort of 24 hours a day. And there's a lot of personal sacrifice that goes into it. And so that's some of the things that we look for. And I totally agree with the comment of Dan in the chat, which is focus on product. Very, very few service companies will get VC funding. You can do a nice business, and actually a lot of cash generating business sometimes with service companies, but they do get low multiples and not ones that VCs tend to fund.
Awesome. Great. So it's sort of, I would say, is a tough environment when it comes to funding these days, but what would your advice be to companies raising right now? And how has that environment changed for companies? And what are you telling your current portfolio companies that are perhaps raising or will be raising? Some advice for companies right now?
This is probably the worst market for later stage companies since 2000. So you have just, the whole thing, that all the momentum that was there, all the money that was there, basically picked up sticks and went home. So if you are a later stage, you're at Series B and later, even at Series A, quite frankly, raising right now is super hard. And it went from, everyone believed you, to we want to see 27 proof points of everything you're telling us. We don't trust anything. So it's really interesting. Now, the one exception to that, and it's in one of the questions, is the whole AI thing, where there has been a tremendous amount of hype. It's like no one learned the lessons of the last 3 years, right? We're back to, bet early, can't miss, hype, and the one thing in tech which is undefeated is the Gartner hype curve, right? And then you're in the chasm of disappointment, and then you begin to build. We are definitely early in the Gartner hype curve in AI. And it's not clear yet. AI is going to change the world. I agree with that, but it's not clear when, right? Or how. And so the valuations that are going into these companies, to me, is kind of ridiculous. And the reality is that non-AI companies face just incredible headwinds in terms of raising. And a lot of the investors who to some extent were tourists in Silicon Valley, the New York funds, SoftBank, have picked up sticks and gone home. So, it's not like Tiger is doing its 4 minutes, of diligence and go, right? Or, or there were other, SoftBank coming in and does the founder like you, right? Does the founder of SoftBank like you? He does. All right, big check, right? That stuff isn't going on anymore. And it's meant the people who are there are really disciplined, very slow moving. And, and so the advice that I give all the time is it's going to take relationships, and it's going to take a lot of proof points, right? And that we can't go to raise without relationships and proof points, right? And that then puts the burden, quite frankly, on the existing investors to decide whether to keep a company going or not. In one case, we did. In another case, the existing investors said, nope, we've had enough, boom, done. So that was it, right? Because there just was no one willing to put risk capital out there, which is, I mean, it's bizarre. You think venture capital is risk capital, but right now it's not acting like it.
Mallun?
Yeah, I mean, it's always hard to be a founder. I sort of analogize it a little bit to having kids. I do love my kids, but if logically you step back and you realized how much work raising a child was, and I have a 16 and 18-year-old now, you might not do it, but then when you do it, you realize just you're in and you do love it and you love them. And so being a founder is always hard. It's something you need to obsess about, 24 hours a day. And in this funding environment, it's even harder. There was a lot of not as strong companies, not as strong founders who were masked a bit, right, because of the funding environment. And so what we're telling our companies now is assume you can't raise again. And what does that look like? And almost every company, no matter how strong they are having revised forecast and or not hitting their numbers, or seeing retention rates reduce because either companies are going out of business or because there were a lot of spending that is now being cut. And so for these founders, it is very hard, because when the pandemic first started, kind of the rule of thumb people were telling people were just have funding for at least 2 years. And some of the people were saying, okay, 3 years was felt like a long time for these founders. But now we're 4 years plus into the pandemic, and it's like, okay, we don't see the recovery yet. And so focus on your foundation, get your core strong. There was a lot of tech debt. There's a lot of org debt. There's a lot of inefficiencies. Focus on your core, get that foundation strong. And what is your ICP? What is your ideal customer profile? Because you were able to sell before to people who weren't, and you could get these deals done, but those are the ones that churned. And so take this as an opportunity to solidify the foundation, really figure out who your ICP is. And so that which will also hopefully reduce your burn rate, because you're like, oh, but we got this enterprise deal. And some of my companies are like, no, you're actually not ready for enterprise right now. You were able to get it, but those enterprises are also not your ICP, not right now. But focus more on the commercial or the SMB right now that is working, that has shorter sales cycles. And so those are some of the things that we're focused on, and then really looking and scrutinizing spend and operational efficiency, something that all of you operators know very well.
No, great advice, for sure. All right, I do see some questions, and thank you both for answering them live. Maybe we'll take some, but one last question before we go to our Q&A. AI is top of mind for everyone, right? It's a part of almost every earnings call. Every leader feels the pressure to say something or have a strategy about it. So where in a lot of ways it's democratized from an access perspective, you and I can touch and feel it. But from being able to scale it from an infrastructure perspective, what are you seeing? Where are you seeing innovation? Where are we lacking? And where do you think we're at? Maybe you're seeing some across your portfolio companies, and Dan, you've also invested in some companies that are large now, that are publicly held. So where are you seeing value creation happen within your portfolio? Oh, you're on mute, Dan.
I may be a bit of an outlier here, so let me start with that. Because I said I am a believer in the Gartner hype curve. So I do think the mania that ChatGPT 3 and 4 have put out into the world may not be that sustainable, right? And so I do agree that the long-term trend towards AI is incredible. I just not sure that now is the right time, as a startup to invest. As a large company, absolutely, right? You have the resources, you can hire the right kind of people, you can make the right kind of things, and there's magic that you can do. And in some ways, you know, the A in AI could stand for automation, right? There's a lot of things that are getting automated, which have been going on for years. ServiceNow, right? There's so much things that are getting automated, and the fact that you can do it easier is a really good thing, right? And there's insights now that will happen that are going to be incredible. And I think a lot of people's jobs will get easier, better, more enjoyable than what they were before. But I think going whole hog into models and logs and yada 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 right now, and then so many of the people who are pitching AI startups have zero AI knowledge, right? Zero. And I have one significant growing AI company in my portfolio that, please excuse me for all the environmentalists out there, but it helps oil and gas companies produce more efficiently, right? But what it took to actually do this was it required people with real AI, and so those people are scarce. They're not easy to find, and in part that's what drives up the valuation. Someone will leave Stanford, as a PhD, and all of a sudden people think, okay, we got to go grab that person, right? Well, that person may not be a business person; they've never worked in their lives. So I am just in this place where I believe that we should cool down a little bit on some of the valuations and the enthusiasm, and I've tried to stay disciplined, right? And this is not my line, but it's a great line, right? Sometimes you have FOMO, but this is a time where it may be JOMO, the joy of missing out.
Mm-hmm. That's right. Mallun? Mute. You're on mute.
Thank you. So Dan's company that he's talking about is oil and gas. It's helping them run more efficiently. But what they don't build themselves as, and what they're not, is AI for oil and gas. And so that's what we're seeing. There's a moment when everyone was like, we're AI for marketing content. We're AI for, no, you're not, because at the end of the day, you have to be a great company solving a problem that perhaps you're AI native, like Dan's company was, or you integrated it, but you're not AI for. And so just like there was a time when you're still hearing, or the debate is like, are there going to be AI companies? Are they AI products? Whereas it's not. I think it's not. It's just like mobile, right? At the beginning of mobile, it was, oh, we're a mobile company. It's like, no, they're not really mobile companies. You have to integrate mobile as part of your business, but it doesn't mean that you don't have to have a compelling business proposition. So what we're seeing is, because we have the benefit of getting invited in to listen, to a bunch of these deals, and some of them are very hot deals. Mostly we've sat out of them, and sometimes we see that there's these VCs who have gone in. It's a highly competitive round, and everyone's funding them, and founders have a great background. We're like, okay, can we see your pitch deck? Oh, we don't have one. Like we just basically started thinking about this company, and then all these VCs came in. So you're seeing some of those, and they get funded. And it doesn't mean that some of these won't end up being successful, but it is a lot of there is still a lot of interest in some of these. And also some of these where you read about that they're getting these high valuations and the VCs are coming in. And when you actually meet with them and dig down, they actually really don't have a business model yet. They have some technology where they're like, oh, we're going to figure out what that is. In a normal world, that would be a pre-seed company where they're just trying to figure out what's that initial MVP, what's that initial product. Instead, they're at A to B level valuation where it's like, oh, we're just going to sign up all these people and figure out what the product's going to be. And not saying that one of these might not break through and be successful, but that's also a lot of pressure with these high valuations on these founders. And oftentimes that's not a recipe for great success. And so there's certain companies that we have, like one of our companies is called Pharos AI. What it allows you to do is, it's called engineering intelligence. It's a new Gartner group. It allows you to give a single pane view across your entire engineering organization of the productivity across, like, whether it's all of your systems. And so they are AI native. They were the team, super smart team. I think they were all over 40, Dan, they fit. And they built Salesforce Einstein, right? Which is the AI that Salesforce is leaning into. So they are AI native. And from the moment that they built this company, they had integrated this and then, AI and machine learning into building great functionality. And yes, with ChatGPT now, they've integrated an AI agent, right, to be able to, have that interface. But they didn't just take a product, and it's like we commented earlier about, they don't just take a venture fund and tack a community on it. You don't just take the product and tack a little agent and say, now we're AI.
Mhm.
Because that also has its problems, because the AI is not that great right now and they still have issues. And so that's what we're looking at when it comes to AI. But we're looking at a lot of AI companies, because learning about, okay, what are all the challenges when you're a enterprise trying to integrate AI, whether in terms of how you build your product or how you sell your product or how you operate your business. And so we will invest at some point in some of these companies, but really trying to have the JOMO, as Dan said. And yeah, and that was actually the first time I had heard that. And resist any FOMO.
Awesome. Well, I do have more questions, but I want to be mindful, and let's, Dan, you've answered most of the questions here. So, but anything in particular you want to talk about? Like any,
So just
go ahead.
Yeah, there was one question about product versus service, which I don't know if I answered to the whole group or just to the host. But let me just say, for those of you out there, service companies in general don't get a very big multiple on sales. So in the old world, we used to say it's, service company gets 1 to 2 times sales as its multiples. You have to get tons and tons of revenue to make it valuable. Product companies can get, in, let's say, 5 to 20 times sales, right? And so when you're a product company, it's that beautiful word of scalable. So in general, you want product companies, and it's super important. And then the other thing for those of you thinking about founding stuff is the one word, that is the core of the early journey is, product market fit and repeatability. Getting to product market fit, you can repeat, right? And what does that mean? It means you got to know what the customer wants and be able to sell it multiple times. And one of my failures is I invested in 2 guys who honestly may have been the 2 smartest guys I've ever met. They were brilliant. These guys were IIT, number 1 in their class, brilliant guys, right? In fact, I was blown away. And we got to the customer conversation and they kind of poo-pooed, oh, don't worry, we got tons of customer contacts. We've been working for 20 years. We'll know, right? And sure enough, when it came to it, they basically said, we believe after talking to customers, they're all idiots. And I'm like, well, someone's an idiot here, but it's not them, right? And what happened was my guys were purists. They said, if you want to use our software, you must do the following 10 things and change your environment in order to use our software. Otherwise, we won't let you use the software, right? And I'm like, okay, this is nuts, right? That's not how the world works. And they said, we'd rather go out of business pure than try and sell something that's not completely aligned with our vision. And and so I think it's super important. This is where like understanding the founder is super important, and that there's a lot of times where people like me get blown away by the deep technical people, right? And it's like, you got to find those people who love customers, right? And if they don't love customers, it's not gonna work.
Yeah. Okay, great. Well, let's talk, maybe I see a theme emerging where let's talk maybe a little bit about risk appetite and how much money is enough to be an angel investor. Let's say, because I feel like you have to be willing to lose the money if you want to put it, right? That's so what's your advice to, let's say I have a $50,000 pool or 150, whatever that pool is. Like, what should I be thinking about when?
Okay. First thing is think about what style investor you are. Mm-hmm. And in my world, there's 2 successful angel investing strategies. One, which is poorly named, but I'm going to use, it's called spray and pray, right? Which is not crazy. You do small amounts, you don't know what's going to work, and you do a bunch and you learn, right? That's one. The other is sort of, well, I believe in my picking skills, so focus, right? So first you should decide, are you a spray and pray investor or are you a focus investor? And you can see a lot of these angel investors right away, right, will brag, I have invested in 500 companies. Okay, we know which type of investor you are, right? Or me, who's invested in 30 companies, right? You can see obviously I'm more focused, right? But I think decide what kind of investor you are. And then secondarily, as Mallun was saying, sometimes for as little as $5,000, you can get into deals. So I wouldn't let that stop you. And what I would do is, but I'd be super honest with the founder and say, look, it's a one and done for me, right? If there's a bridge round, I can't re-up. But I want to be helpful. I want to be useful. And here's how much time I can give to this, or here's how we should relate, right? But also not to expect, I've seen some people write $5,000 checks and expect to be the chief strategy officer, right? And you're not the chief strategy officer when you've written a $5,000 check, right? So it's just figuring out that how to be useful without being overbearing, and then learn, see, and and then adjust as you go forward, right? That's the way of the world.
I think that's absolutely right, which is why are, what type of investor do you want to be and why are you doing it? Are you doing it because some people say, hey, as long as if it's people that I know who I think are great, I'm just going to give them money. And we all know there's people like that, you'll just give them money because you believe in whatever they're going to do and you'll be there to help them. Others is, hey, this is an area that I'm super interested in. And so I want to proactively meet people and look for deals. Is it others, which is just, hey, I've heard some people who have, oftentimes these are people who are quite wealthy who just say, hey, this is my community service. I just go and I angel invest and I don't expect to get a return. And in fact, most of those people are not active in helping the companies. Most of the people I tend to deal with angel invest because they want to help the companies. I see Katya there saying that she's invested in too because she believes in the company and wants to work with them. And that's what we tend to do at Operator Collective. What I found when I first started investing as Operator Collective and saw a great number of companies, they'd be like, oh, so-and-so hotshot CEO is one of the investors, blah, blah, blah. And I would sometimes know the CEOs. And I say, hey, what do you think of this company? And they'd be like, why are you asking? I'm like, well, we're looking at it. Oh, is it a good company? Well, you're actually an investor. Oh, okay. If I'm an investor, I'm not that active. So, there's that type, which is fine. It's the 500 companies and yeah, you might not remember everything you're investing in, but I would say a lot of us don't really probably have the net worth or the interest to just really spread it out so much that you don't remember who you're investing in.
That's great. Awesome. I know we have a couple minutes left and looks like we've answered pretty much all the questions and Dan's been answering them and Mallun as well in the chat. But maybe we wrap up with diversity or the lack thereof in venture. And I hear sometimes that it's a pipeline problem, that there aren't enough diverse founders, there aren't enough companies. From your own experience, you both have supported and invested in a lot of diverse founders. I would love, and I'm sure the audience too, what does the data look like and what can we do to help move the needle as well? And
Mallun, you should take this.
So Operator Collective is, I've done from the time I started out as the VP of Global IP at Cisco, Chief IP Counsel. There were very few women in that space. That's why the 7 of us that there were ended up starting a nonprofit. And so I've done the diversity thing for a long time, deeply believe in it, but I also believe that forced diversity doesn't work. And I didn't want to create silos. So Operator Collective, although our LP base is 90% women, 40% people of color, it has always been from the beginning to invest in founders from all backgrounds who share our values of, operational excellence, and diversity, et cetera, builds great teams. And so, and we also invest in enterprise and B2B, which also tends to be very male, heavily male dominated. That being said, all that you assume and know that is true, and the studies have shown, is when you can diversify the network of people who control the money, then that diversifies. It's not just the same group of PayPal founders deciding which group of founders are going to be successful again and again, and having that cycle perpetuate, you have now 70% of these operators who have never invested in venture before now referring us deals, helping us do diligence, helping to support these companies. And so as a result of that, our portfolio, less than 2% of venture dollars went to women last year, but our portfolio has, over 50% have a woman co-founder, and almost 33% actually have a woman CEO, which is also unusual. And 20% have an all-female founding team. And about 65% of our founders of our companies have a founder of color. That's broken down. It is most heavily Asian, but we actually have a decent percentage that's Latinx, which is very, very rare in tech, to say, and Black founders as well. And so it's not that we go out and say, hey, we need to have a certain number, but we have a different lens. And every single time we're hearing a pitch, whether it's from a woman or otherwise, we do ask ourselves, like, am I being biased? Am I just, am I making sure that, because you do hear some of the stereotypes of like, okay, are they, you just want to make sure you're not falling into the pattern recognition of what does a successful founder look like. And as a result, we end up with a great portfolio that happens to have more diversity than most venture funds.
Amazing.
I think Mallun's totally right. The only thing that I would add has been that there's been an agenda behind some of this that I don't like. And so what we want to make sure is that the solution is not worse than the problem, right? And the idea that we're going to lower math standards in California in order to make it more equitable doesn't strike me as a good for diversity answer, a good answer for anybody, right? And so I just think that we have to make sure that in our efforts to actually create a more equitable society, which I totally believe, that we don't make things worse by creating simple, kind of sounds good solutions that don't really help, and that we really do the hard work of finding and giving opportunity to great founders.
Great. Well, thank you both. Thank you for being with us. As much as I'd love to continue the conversation, this brings us to the end. And thank you to our audience for being here. And yeah, all right. Thanks all.
Thank you.
Thank you all for having us.
Bye-bye.
So, bye.